Hello guys and welcome to my channel. So today's trading idea was a winning trade idea. I will recap what happened and why I entered the trade, what I could have done better and what I should have done. Okay, so I will be targeting everything emotionally and technically. So going into Euro USD, going into the daily chart. So and actually, for Wednesday, I am bullish. Okay, I'm bullish for this high right here. Now, let's recap Tuesday. Okay, today's trade. Now, Monday we opened, we formed a gap right here. Okay, so this is a liquidity void. So let me take it for below. Okay, so this is a daily liquidity void. Okay, so we worked, we did not reach this daily liquidity void yet, and we pushed higher into a daily fair value gap. So this is a daily fair value gap. Now, the idea is I have a weekly, I mark out my previous week highs and lows. So this is my previous week low, okay, in green, right bottom, also in green, and this is my previous week high. So one of them should be my target for the week. Okay, so I will recap a little bit to see why this is the idea. So every week takes the previous high or low. Okay, so now the idea is if the week just sweeps liquidity, there is a high probability that we are going to the next target. But if we are in a deep discount or deep premium, there is a high probability that you don't see a liquidity sweep and you see immediate reversal. This reversal is a retracement on the daily candle. Okay, so on the daily time frame. So the idea is that right here we closed above this area. Okay, so there is a high probability that we go into this high. But as you can see, we swept previous low, we closed also liquidity, so the probability is to go to this area. But as you can see, we broke. Why? Because we are in a deep premium. This is my previous high and low. So if I take the 50% of this area, it's right there. We are in a deep premium, approximately making new premium. Okay, so that's why we need a retracement. While we are retracing the idea that previous week low, if we close above it, uh, previous week high, if we close above it, the idea is that we are continuing to take previous week high is a little bit not right when we are in a deep premium or in a deep discount. So my target was the weekly target for the first half of the week. Okay, I have the previous week low and the previous week high as targets. These are my essential targets. Now, what happened is that I went into the hourly chart and I saw liquidity sweep of previous day high. Okay, so this is previous day high buy side liquidity. So as you can see, we swept previous days high buy side liquidity, plus we were consolidating on CBDR range. Every rule of my rules were checked. I have a weekly bias bearish into the weekly target and we have a new void. So this new void is a weekly target too. Okay, so it's a weekly target. So that's why we have a void, we have a previous week low, so these are my targets for Tuesday. But since we are in a deep discount, I just anticipate the low hanging fruit, the daily low, the void. Okay, so we made the void, we rallied to the upside, the void is below us. Okay, so there is a probability, higher probability that we are going bullish. Now, as you can see, what happened on CBDR, there is no consolidation. So Wednesday London session, there is no trade, but there is an idea that we are bullish on Wednesday. Okay, so the idea that you are bullish on Wednesday is very important because it will give me an opportunity to enter a trade during New York session. Why during New York session? Because the CBDR range is not consolidating and it already moved above 30 pips. So because it moved above 30 pips, I need to wait for New York session for me to have an entry going long into my previous week high. So we swept liquidity. Right here we have a shift in market structure. So right here, shift. While shifting, we formed an hourly fair value gap. So if I go to my rules, if we are consolidating and I see Asian range, sweep CBDR range liquidity, and break structure with my daily bias, forming a fair value gap, my entry should be on the fair value gap. Okay, so my first entry should have been at this high right here with a stop loss above this area around 10 pips, very beautiful, and my target should be the high of the void right there. So this should have been my first entry, but because I didn't have a previous day confluence that we are going bearish during Tuesday, I did not enter right here. I needed to wait for a 5-minute shift in market structure. So what happened is that we made a 5-minute shift in market structure, but there was no fair value gap on the 5 minutes. So what I did is I went to the 15-minute shift in market structure and we formed right here a fair value gap, and this was my first entry. This was my first entry right here. My stop loss above the swing high that formed during London session. Why? Because this high, I'm anticipating that this high is the high of the session, not high of the day, high of the session. It's very important. So since this is the high of the session, I don't like to see this high being broken. So if this high is broken, I need to be stopped out. So this is my first entry. This was my first entry. My target was at 27 pips perfectly. Then what happened is that this is the high of the session, this is the low of the session. So if I want to have an entry during New York session, I need to have a 50% retracement. If I take the fibs, as you can see, perfect, perfect. This is the 50% retracement on the 15 minutes chart. If I go to the hourly chart, there was a fair value gap. As you can see right there, this is the fair value gap, and this is the 50% retracement of this low of this high to this low. This is the hourly retracement. We have this 15 minutes retracement. So it's approximately the same. I could have taken it on the hourly. Now, since this is not on my kill zone, I should have not taken the second entry. So the second entry was when we made this swing, I waited for break. I did not wait for this break. I just waited for this candle to close like this. I actually entered right here at this candle when we swept. My stop loss was above this area and target should have been the same target. As you can see, 12.5 and 27 around 4%. It should have been around 4%. Now, if I go to my executions, you can see that the entries were there, but the target was different. Oh my god. Okay, as you can see, if I go into the 15 minutes chart, you can see that I entered at the fair value gap. This is my stop loss. Then I entered right here after closure. This is my stop loss, but I took my position out at the sweep of this low. So the problem is that I took my position out approximately at this area right there. Let me check it carefully. Okay, right there. So like this and like that. It was a 2.89% on my account. Okay, so it wasn't 4% profit, but it was decent. Okay, so the problem I've had three problems actually during this execution. First of all, I did not enter on the hourly fair value gap. So if I entered on the hourly fair value gap, this would have been a very decent 3% idea. That's one. Second entry was perfect. Stop loss was perfect. I moved this stop loss to this stop loss when I entered the second trade, so I'm risking overall around 1%. Now, second mistake, entry not in my kill zone. Although it was a good trade right here, but it's based on gambling, not discipline. So this is a wrong entry, even though it was a winning trade, but it was a wrong entry. What should I have waited is retracement into this fair value gap right here, entry on the 50%, stop loss above the swing, targeting this low. If I wanted to enter and to add to my position, this should have been my third entry. Okay, so right here, 33, right there, 27, it's around 6% on my account, not 2.8%, and right there, 1%, it would have been 6 and 1, it would have been a 1 to 7 risk to reward ratio. Okay, so I did not enter on my kill zone. Second mistake. Third mistake, I did not wait for my target to be hit. This is another mistake. I'm trying to work with this mistake. How? By waiting for 12 a.m. to re-enter the market when I take my positions. In this way, whatever happens during London session, it will not affect me. I will wait for, 6 a.m. because 6 a.m. I will be starting my New York session. We might have reversal during the New York session. I need to keep eyes on the market. Okay, so in this way, when I have a 2 hour frame, price could go lower. Okay, so could go lower. I will not be taking my profit. For example, I would have taken my profits around this area if I did not have the discipline to just enter the market around 12 a.m. Around 12 a.m., 6 a.m. right here, 12 a.m. 12 p.m. on my country. Around 6 a.m. I entered the market. I saw this being respected. I saw shift. I entered right here. Stop loss right there. And my target should have been this area. This is a wrong entry because it's not in my London session. There is a high in my New York session. There is a high probability that we sweep liquidity into this 15 minutes fair value gap. Right here, there is a 15 minutes fair value gap. We could sweep liquidity after we continue lower. So what happened is that we consolidated right there, but because New York was anticipating reversal, we swept liquidity from the sell side liquidity, not the buy side liquidity. If we were going to continue lower, we would have swept this high. That's why it's a wrong entry right there. After you analyze it, you know why it's wrong. Okay? Now, three mistakes: not entering on the first hourly fair value gap, second mistake, not waiting for my target to be hit, and third mistake, executing not in my kill zone, the second entry. So I had these two entries. I didn't have the first one, and I collapsed all my positions at this area, making it 2.8% on my account and not 6 and 7%. So my target for every single trade that I take, around 5%. Why? Because I do not take trades every single day. I need specific things to see in the market in order for me to have an entry. Okay? So I am an intraday trader. I need to maximize my profit because I don't have every day trade, plus I don't have every week trade. So there is 1 week per month. Usually the first week of the month, it's very difficult for me to have a trade. Okay, that's what I noticed. So per month, I have a target of 20%. I can make it with one trade. I can make it with 5 trades. I can make it with 2 trades. So the idea is that on average, I have a trade every single week. So my weekly target is 5% on average. I can make more. I cannot make less. Okay, so this is my target. I'm working for my target. Previous week was a break even. Now I'm starting in a profit this week. Okay, so if I go to my Excel sheet, right there, journal, as you can see right here, we made 137. This is my checklist. Everything is checked 2.89%. As you can see, we were minus 0.6 and now we are 2.1 up on the account. This is my win rate, 50% win rate. I actually don't care about my win rate because I backtested the strategy and it has a very high win rate and a very high risk to reward ratio. But every single trade that didn't have everything checked was a loss. Right here, I didn't have a daily bias. It was a loss. Right here, I didn't have an hourly retracement or an entry model, there was a loss. So when everything is checked, there is a high probability that I will be winning the trade. Okay, so as you can see, I am 2% profit right now, 2.1% profit on my account, and my target is 10%. As you know, for every single profit, the target is 10%. Now, this is my recap of today's trade. Now, what's happening is that if we want to hit the previous week low, we should have hit it right now, okay? Or we might Wednesday rally into the previous week high, and then we anticipate Thursday reversal. If there is Thursday reversal, Friday I can have a trade, okay? Because Thursday high of the week, Friday reversal into the previous week low to be taken, and into this daily liquidity void to be filled all the way long, okay? So tomorrow I am bullish. I am bullish into the previous week high. Now, the idea is that going into the XY, we hit the weekly void on a premium array, plus we shifted structure to the upside, so we are in a very premium area. Since we are in a very weakly premium area, there is a very high probability that we are going to go into a discount daily area. So if I take this swing low and this swing high, my discount area is at this fair value gap going into Euro USD correlating. It's this daily fair value gap right here, which has the previous week high. So this is my target for tomorrow. I will be waiting for London session. Usually what will happen right now, this is the CBDR. Usually London session might continue a little bit, then New York retrace and push higher, or we might consolidate during London, sweep of London during New York and push higher. So let's go to the Forex Factory to see Wednesday what's happening. As you can see, 8:30 a.m. there is core CPI. So what I will be anticipate, not sweep of liquidity, core CPI, immediate movement to the liquidity, immediate, no sweep, just movement. Okay, so what I will be anticipating is I will have retracement before core CPI, and when core CPI launches, we will be launching into my target. Okay, so there is around 50 pips. Let's take it from your side. So around 50 pips, I will be making around 7, 8, 9%. So it would be a very decent trade if I had the opportunity to take a trade tomorrow. So what I will be doing, I will go like this, 13, 9, 2023. I am bullish. My target is it's the previous week. So drop down right here, previous, so PVL, previous week high. What I do right now is I go to my checklist, developer, how do I do it? Okay, insert, no, so no, data. Okay, data, it's for B9, B9. Okay, so previous week high, time, NY session. I will see if there is any hourly retracement, entry model, 5-minute fair value gap, and hourly retracement. Okay, so this is the idea for tomorrow. It will be Euro USD trade. I don't trade except Euro. It will be a long position. I'm mastering the Euro chart. Okay, so I'm mastering this Forex pair Euro USD, and I have a lot of correlations. It was a very decent trade. I knew what I need to see in today's trades. That's why I'm very content. Okay, but I can have improvement. So now I am on the road to become profitable, but I can improve and improve. I will keep learning. I will keep improving. I will try to become disciplined. I will try to have specific, very specific targets that align with my emotions and align with my psychology. That's why my first target for my first entry is just 30 pips if the first target is above 30 pips. In this way, I will see that I backed 3% in my hand, and if I lose the second entry, it's fine for me. I back 2% on my account, which is fine for me. Okay, so if I don't maximize, I'm content with 2%. Okay, so this is the idea that I think about it. So bullish, previous week high, New York session, I need retracement, and right here we know the status, if it was a win or a loss, and for sure, forward testing is very important. We see if it was a win or a loss. Also, I have a top-down analysis. I have a weekly bias, I have a daily bias, when to have an opportunity to take a trade during London session. So CBDR range above 30 pips, I need to wait for NY session, mark the daily open, weekly targets. Okay, this is for London, mark NY session, anticipate Judah swing. So I need to do these things and these things. Okay, the mid section is for the London session, and this is the time of execution. So everything is checked out. These are not essential to check when we are in New York session. Sorry. So I will not be waiting for news actually. I will try to position myself before news, because if I position myself during the hourly chart, there is a very low probability that I will get swept before we continue. Okay, but what I will not be doing is positioning myself on the 5 minutes chart. Why? Because there is a high probability for 5 minutes sweep of liquidity, then continuation. Usually, core CPI, there is no sweep of liquidity. Core CPI, immediate movement to the target. Okay, so this is what I saw in the previous months with core CPI news. So we shall see what will happen tomorrow. If I don't have an entry opportunity, I will come back on Thursday. So I have Tuesday, Wednesday, Thursday. I can have 2 opportunities per week. So Tuesday, Wednesday, Tuesday, Thursday, Wednesday, Thursday. Okay, these are the opportunities that I can have, and uh, it needs to be an A plus setup. If it's not an A plus setup, I will never take the trade anymore. Okay, because I see profitability when I take an A plus setup. Okay, so it's very important for me to have an A plus setup. I have very specific rules to be met. If everything is clear, personal weekly targets, no more than one losing trade per day. I cannot take more than 2 opportunities per week, no trade during Monday and Friday. And if Monday rallies, Tuesday no trade. So if there is movement during Monday, Tuesday no trade. Plus, now there is a rule that I did not write right here. If weekly profile, Thursday high of the week or Thursday low of the week, I anticipate Friday to be bearish or bullish, respectively. So I will be trying to take a trade if there is no news at 10 a.m., 2 p.m., 8:30 a.m., okay, during Friday. If there is news, no trade, because usually Friday's news are very powerful and London session will consolidate in order for NY to sweep liquidity, then continuation. Okay, so I have more experience in the market. I have some things that I'm not I did not write in front of me. It's based on experience and knowledge, and just keep it in my mind when I'm entering the market. Okay, so just small things to take. Now, there is a small tweak idea that I need to keep in my mind. We are in a very discount. Okay, so taking longs is a good idea. Okay, somewhat good idea, because we did not yet shift on the daily chart nor the weekly chart. But we will be retracing right now, okay, or we will be expanding. Okay, so if I go to the weekly chart, we might now expand to the upside. Okay, so there is nothing that can hold us to go up, and there is nothing to hold us to go down. It's based on the weekly, monthly, and quarterly time frame. But the idea is that we shifted structure right here, so we might see a deep retracement before continuation to the upside on the XY, so continuation to the downside on Euro USD, because they are inversely proportional. So I know that it's a long video, but it's a very important video. It will give me a framework, and it will give me confidence going into the market in the next days. So my weekly target is 5%. I'm up now 2.3% on the week, 2.8. Actually, if I go to my checklist, if I go to my forward testing, what I do is equal this minus this. And it was a 2.75%. Okay, so it was a 2.89% win, but there is commission that I need to deduce from it in order to me for have the actual percentage growth. Okay, so it was a 2.75. I need 2.25%, around the same percentage RR, in order for me to have a 5% weekly target hit. Okay, so I have 2 more days. I'm patient. I need an A plus setup. I don't want to lose. Okay, so this is the idea. Uh, It's not that emotionally I don't want to lose, but I want to be faster. And how I be faster? I know my goals. I have awareness, and I know my emotions, and I be disciplined and patient. This is everything. You need to be disciplined and patient, and you'll have everything that you need. Okay, so if you see this video and think that's insightful for you, don't forget to like and subscribe. See you in the next one.